So a little short of the market makers upside expected move for today, but we did trend back up very slowly, largely on rising puts, but we were unable to breach the top of the iron condor that was sold yesterday, leaving us fairly range bound for the majority of today's price action. We have a little bit more room to the upside now to Gamma Max. Gamma Max did move slightly higher from 66 to 70 yesterday, but the pullback unfortunately wasn't sufficient to push Gamma Max very far out of the money. Tomorrow morning we have retail sales, so up or down, probably based on the data. I would say another test of Gamma Max is definitely possible, although it doesn't look likely with all the positioning that pulled back. Yeah, but we'll see. If retail sales is kind of neutral, we may just end up not getting kind of anything out of it. Yeah, in which case we might see the Condor come back again, although the short call side of it might be nearer the money at that point. And that would put us at probably just stuck around 58.50. The head and shoulders on futures didn't break down, it broke up, but very weakly and on fairly low volume as well. Even the volume improvements during the bounce itself were fairly low. In the longer term, I think forward returns have been declining. So we may see continued profit taking from the bull side. Commodities broadly down today. Mostly, it seems just oil and industrial metals. Precious metals rose, as did some agricultural commodities. Yields at the top end of the curve pulled back again for the second continuous day of decline. However, the dollar continued to rise despite that, mostly up against the euro, the pound, and the yen. Not very much up against the yuan, but the yuan is at 7.13, which is now above target and means that there's going to be downward pressure on yields as yields are bought to stabilize the dollar yuan pin. Correlation turned down pretty hard today. That didn't yield any price improvement in NQ really, or at all actually. However, should correlation continue to turn down, it likely will. Carry trade leverage pulled back for the second day now, and is fairly stable since early this morning, around 72, 7.42, 7.43x. The short end of the carry trade kind of turned up a bit today. The forward yield on vol did start to fall off today, though, and we should pay attention to that. If that goes negative, that could be quite bullish for indexes. So keep an eye on that. Part of that, was the VIX expiration. So we'll see how that shakes out over the next few days, and see if that demand for volatility picks back up again or retreats further. Bond vol still rising. The range on it hasn't shifted much. 67.52% of the S&P over its 20-day moving average. We've got continued decline in vol, so this might be indicative. This is kind of a big drop of more vol selling coming in, and we did discuss last night that we might see some shift in the volatility as the VIX expirations pass. That may continue tomorrow, and we may see volatility continue further down, which will be bullish. But I think for now, since bulls are kind of range bound, they would probably prefer to just short out the realized vol and get that more in line with the decline in 30-day and 90-day volatility. No changes to Fed Fund future expectations for next June, but the spread on the 210 did retreat from yesterday. On the technical side of things, basically we're bouncing back up and retesting the trend that we failed yesterday. We did. And now we'll see if, we get a move lower, push down into that long-term support, or if we kind of just stabilize and consolidate here. I think retail sales should be enough to edge it one way or the other, but it'll be hard to say. Obviously, if retail sales are bad, The dollar will very likely decline. And I think that's about it. I'm going to go do some research on Carvana and Root. I'm going to spend a couple hours on that, I think. I'm kind of interested in something I saw there. But I will talk to you guys tomorrow. I hope everybody has a good night. Later.